So once again, good morning to everyone. I hope you are all doing well today. So in the previous session, we had last looked at the example that you see up on the screen. So this was basically looking at how to calculate the cost of a job, including any work in process. So remember we said that the total cost of a job is calculated by summing up three figures: your direct material, your direct labor, and your manufacturing overheads. Over and above this, we have to consider the fact that the business might have a certain amount of work in process from a previous period. So this would be any outstanding goods. It wasn't complete in the previous period. It will now be complete in the current period. So we need to account for that. So this is where we also bring in, adding into this amount, the work in process. So over and above just adding up direct material, direct labor, manufacturing overheads, we would also add in your work in process opening balance. And that would give us the total cost of a job. So this is a typical type of question where you're going to have to bring in that. I am going to be going through with you a question from a past paper where we are incorporating everything that we're looking at in the examples here. So you'll be able to see right from the get-go what we are asked to calculate for a specific job, the total cost, bringing into consideration sometimes the work in process. And then up until this point, we've looked at just the total cost, but you'll see that we're going to look at here, as well as in that additional example, how to now use this cost to calculate the selling price for this particular job, or the sales for this particular job. And then we also use that sales to enable us to calculate the gross profit that will be made from this particular job. So all of that is going to be done now, as well as I said, that additional example. So example 7.3 is the next one that we're looking at, and this is a more full example. So what I mean by that is it's a typical example where we go from start to finish, incorporating for many different jobs the total cost involved in production, and then we also bring in the markup that will be added in order for us to be able to calculate the sales, and then use that to calculate the profit that will come off a particular job. So in a typical example, we calculate everything from the cost of a job, the sales from the job, the gross profit. We identify which goods were completed, which goods were incomplete in a period, the value of your incomplete inventory, the value of your complete finished goods, and so on. So it literally is everything that is calculated in a typical question here. So example 7.3 says Liam Key has provided the following information for the third quarter of 2009. So this is July to September. So they've given you opening balances for two jobs. As you can see, you have the job 641 and 642. These are your work in process opening balances. And then on the next page, you'll see that they gave you more information pertaining to four jobs. You have job 641, 2, 3, and 4. Now, what this is saying to you immediately is that we obviously then don't have a work in process opening balance for job 643 and 644. So there would only be one for the first two. So it's perfectly normal that you don't have an opening work in process balance for every single job. So don't be alarmed if you don't see one. So you have an opening balance just for the two jobs, and then they've given you the direct material cost, and this is also a very typical way that you will see the information provided to you. So here you have the direct material cost given to you for each job, the labor cost given to you for each job, and then the machine hours given to you for each job as well. So the moment you see, and I think I did mention this to you in the previous session, the moment you see that they have said to you that, like here for instance, they've given you the machine hours. immediately it signals to you that it wasn't random that they listed out the machine hours for you. There would have been a reason that they listed it out. And the most obvious reason for them having listed it out for you is the fact that those machine hours would have been used to calculate your manufacturing overheads. So the moment you see, apart from direct material and direct labor, an item such as maybe machine hours, labor hours, or number of units, and so on, immediately it should signal to you that they've given us this because we're going to need to use it to calculate our overheads. So it is an easy way to identify early on because you'll obviously be using your reading time to read through these questions and identify any key aspects. So apart from the fact that you could identify it by just looking at the information provided, they will also have to tell it to you. They will have to say to you in a typical question that overheads are applied using machine hours. And they did tell you that as well in the first point here. They said to you factory overheads are applied to jobs based on machine hours. So this just confirmed the fact that you identified because they gave you machine hours, that they would have the basis for your overheads. So they gave you the machine hours because you would need to use that, apply it to the application or absorption rate once you've calculated it. And they've given you the information to calculate that application or allocation rate. They said to you that the budgeted factory overheads for 2009 was 800,000, and then the budgeted machine hours for the same period was 500,000. So remember to calculate an allocation rate. It is always taking the budgeted overheads and dividing it by the chosen basis. So budgeted overheads over the chosen basis. In this case, the chosen basis is the number of machine hours they said to you here. So that's going to be budgeted overheads of 800,000 divided by your number of machine hours, which was 50,000. And that would tell you that your allocation rate, which you'll see we also have done in the first step here, is 16 Rand per machine hour. So we've calculated our allocation rate. Then they said to you that for job 641, there were 50 units that were completed. Job 642 had 100 units that were completed. And job 643 had 1,000 units that were completed. The fact that they did not give us a number of units completed for job 644, remember there is a job 644, this would have said to us that because they didn't give us a number of units that were completed, that this account would still be a work in process. So that is going to be the incomplete, the value of your incomplete items at the end of the period, because they clearly did not give you a number of units completed, which means it would have been incomplete. The 800,000 and the 500,000 were given to you in these 2 points. So they said to you that the budgeted overheads for 2009 was 800,000 and the machine hours for the same period was 50,000. Okay, so they will have to provide you with this. No problem. So they definitely will have to provide you with these figures to calculate the allocation rate. So you will take your budgeted overheads. Remember, sometimes it might be separate. So they would say to you the fixed budgeted overheads is, for example, let's just say 500,000 Rand, and your variable overheads is 300,000 Rand. So all you would have to do is sum that up if it is split into fixed and variable, and together that does give you your 800,000 Rand numerator. So sometimes they'll give it to you as is, so you'll take that figure just as is and use it as your numerator. Sometimes they might separate the budgeted overhead and put it as fixed, and variable, you would add up the two to give you your numerator, your budgeted overhead. It is learning unit 7, the last one. We started it in the previous learning unit and we're continuing with it now. Okay, so we know that these three jobs completed. Job 641, 642, 643, they were completed, which means they are going to the finished goods account. And then, as I said, job 644, because I did not mention to you that anything was complete here, this would be a work in process and it would be an incomplete good. Okay, so they've given you all the information necessary at the top of the next. Total cost of all of the jobs on the 30th of September. Sorry, it got duplicated a bit here, but you can follow in your textbook as well. It's the same example from there. So it's a total cost of all of the jobs, then the cost of the finished goods on the 30th of September, and the value of your work in process. So the total cost of all of the jobs, remember total cost is calculated as I had written just now. When we started off, it's calculated as a direct material, direct labor, and your manufacturing overheads. If you do have any work in process, opening balances, then it must also be included here. So you can either add it in at the beginning or you can add it in at the end. Either is perfectly fine. So here, let's look at the information provided, the total cost of all four of these jobs. So we need to first always consider, was there any work in process, opening balance for any of the jobs. Job 641 and 642 did have opening balances. So for job 641, it's the 2850. That's your first figure, and you can do this in table format because it is easier for you to understand that in table format. So here it is, as you can see at the top, we've listed out all four jobs, 641, 642, 643, and 4. At this point, you do not need the total column, so you can strike that off. I will show you in the example, in the additional example that we do, where you will need to calculate a total column. Okay, so job 641, it had an opening work in process balance of 2850. So to that, you are going to add any direct material. So here, from the information provided, you have your material costs, your labor costs, and your machine hours. Remember, your machine hours at the end here is used to calculate your manufacturing overheads. So your applied manufacturing overheads. We already had calculated that the allocation rate for your overheads is 16 Rand per machine hour. So basically, to calculate your applied overheads now, we're going to say that each one of these times 16 is going to give you the respective overheads for each of these jobs. So 20 times 16 for the first job, and they've actually done it for you here as well. For the first job, 641 is 20 times 16, which is 320. That's your overheads for job 641. For job 642, it's 560. Job 643, it's 1760. And job 644, it's 12. So this was straightforward. Once you had your allocation rate, you would just multiply it by the respective number of machine hours for each job and then add those up. So now that you have that done, back to calculating the cost of job 641, we started off with your work in process opening balances. Let's add in your direct material, your direct labor, your overheads. So here your direct material is for job 641, the 750. Then the direct labor is the 480, and the overheads we had calculated here for job 641, 320. So you're going to take all of those figures. There's the material, the labor, the 320 for your overheads, and those four added up now gave you a total cost of 4,400. The same now with job 642. It did have an opening work in process balance that was here. So that was 1,330 plus its direct material of 240 plus the 620 for labor plus from here your overheads for that job is 560. So you took the 1,330, the 240 material, the 620 labor, the 560 overheads, and those four summed up gave you a total cost of 2,750. Then for job 643 and 4, there were no opening balances, so you can ignore that. And you're just going to now sum up the material, labor, and overhead. So for job 643, material is 54, labor is 27, overheads is 1,760. So the 5427176 0 added up gave you the 9860. And then the last one for job 644 again is material of 2150, labor of 1650, and then here is your overhead 1,200. So 2150, 1650, added up gave you 5,000 rand. So this is how you're calculating the total cost of a job. And then at the bottom, as you can see, we've included a little block for each one saying or stating whether each job was completed or incomplete. So for job 641, remember they said to us these three jobs were completed: 641, 642, 643. It was 50 units that were completed in production for the first job, 100 units for job 642, 1,000 units for job 643. So that was 50. I'm just going to write that here as well. That was 50 units here, 100 units here, and 1,000 units that were completed here. So here we have then stated that these three jobs were completed, and the last job 644, as I said to you, this was incomplete, so this would have been in your work in process account. Okay, any questions here so far? So they had also asked us to remember at the top here, they said calculate the total cost of the job, which we just did now of all of the jobs. And then they also asked you to calculate the cost of the finished goods and then the value of your work in process. So the cost of your finished goods would be the sum of all three of these jobs because these were the finished or completed goods. So it's basically the sum of the 4,400 plus the 2,750 plus the 9,860, and that would give you the 17,010 on the next page. That's your cost of your finished goods. And then your work in process was just the 5,000 rand from here because that was the only job that was incomplete. And that would be your work in process of 5,000 rand. Okay, so now we're looking at taking those costs. We're using the same example, but now we're looking at taking the cost of the job once you know what the cost is. And as I had said to you, determining the sales or the selling price of that specific job by bringing in any markup percentage. So again, here they will specify to you and they will say to you that this is the markup percentage or this is the sales amount that we will use, and you'll use that sales figure to calculate what your gross profit on the particular job will be. So firstly, before even looking at that, remember the way in which we calculate a profit is it's the sales that come off a particular job less the cost involved, and that's going to give you your gross profit. So here we have the cost already. That's what we calculated in this table, that final item here. So we have the cost for every job, 641 to 644. We don't know the sales. That's what we're going to look at now. And then once we have the sales, we're going to take the sales, subtract the costs that we have already, and that's going to give us the gross profit. Now here, the only ones that we are going to be able to calculate this for is job 641, 2, and 3, because those were the only goods that were completed or jobs that were completed and can be sold off to the customer. Job 644 is not going to be included here because that job was incomplete, so it's not something that you can now add on a markup to and sell off to the customer. So for job 641, they said to you here, and again, this is continuing from the previous example we just worked with. They said to you a markup of 50% is added to the total cost and all of the units were sold. And remember, job 641 we saw had 50 units that were produced. Here it is here. So I'm just going to write down that it was all 50 units. Then job 642, they said to you 95 units were sold and they sold it for 35 Rand per unit. And here there were 100 units in total that were produced. So that means that we didn't sell off all of the items that were produced. We only sold off 95 out of the 100. And then the last one says that a markup of 30% is added to the total cost and all of the units were sold. And here for this job, it was 1,000 units and we sold all 1,000. So the only one that we need to adjust the calculation for here is job 642 because we only sold 95 units whilst we had produced 100 units. So we need to bring that into consideration when we are working out the gross profit. But for now, let's look at the sales. So to work out the sales for each one of these jobs, you're going to, and you'll see you can do it in table format as well. Just now, I will show it to you, but just working off the information that we have here for a second, they said to you that a 50% markup is added onto job 641, and we need to look at what was the total cost. So it's 50% that is added on to the total cost. So let's go to the total cost. And the total cost of job 641 is 4,400 Rand. So basically what we're going to say, and we saw this formula in the previous lecture, is to calculate the sales, you're going to take the cost and multiply it by 100 plus the markup percentage over 100. So here for job 641, the cost is 4,400. You will multiply it by 100 plus the markup percentage is 50, so 100 plus 50 over 100. And that's basically 150 over 100. In the 150. So that would give us a sales figure of 6,600. You'll see it on the next page as well. We've shown you all of the working out specific to this calculation. So as you can see here at the top, they had taken the 4,400 and multiplied it by 150%, which is the same as saying 150 over 100, and that gave you 6,600. And as you can see in the table at the bottom, like I said to you, it is preferable that you do answer this in table format. You don't have to, but it just makes it easier for you and I to read off. So here it is for job 641, 642, 643, and here you can include your total column. So here you have for only the 3 jobs that were completed, their sales here, the first column, minus the cost of sales to give you the gross profit. So the sales now for job 641 we just calculated was 6,600 Rand. Then for job 642, it was, they said to you, 95 units were sold for 35 Rand a unit. So it's simply 95 times 35 and that would give you a sales figure of 3,325, and you enter that here into the table as well. If you're doing this in table format, you can perhaps make the blocks big enough so that you show the working out within the block, but you have to show the working out. There are marks allocated to it. And then for job 643, they said to you it's a markup of 30% that's added to the total cost. So again, let's look at what the total cost was. For job 643, it was 9860. So you're going to say 9860 multiplied by 100 plus the 30%, so 130 over 100, or you can just say 9860 times 130%, or 1.3. And that gave you a 12,818, which you also entered into the table. So you now have your sales figures for each individual job, and you can also, to calculate the total, sum those up. So these three summed up gives you the total sales of 22,743. Okay, so that is how we've calculated your sales. Now for your cost of sales. So your cost of sales were calculated already for most of these projects. So for job 641, 642, 643, we already had done here in this table the cost of sales. So your cost of sales here, I'm just going to circle that for you again. Your cost of sales here was the 4,400, the 2,750, and the 9,860. Now for the first job and the third one, for job 641, 640, for job 641 and 643, they said to us that all of the units were sold. Now, because they said to you all of the units were sold for these two jobs, that means that whatever the cost was here, the 44 and the 9860, those were for all 50 units there and for all 1000 units here for job 643. So those we can leave exactly as is. So in your table, the 4400 for job 641 and the 9860 for job 643 will be entered. And remember, it's going to go within brackets because it is an outflow of cash, or it is an expense to the business. So it's being subtracted. But for job 642, they said to us that 95 units was sold. Now here, when we calculated the total cost for job 642, the 2,750, this was a total cost of 100 units. Now we need to bring into consideration that if the cost of 2,750 is for 100 units and we only sold 95 units, we need to only include the cost of 95 units. So to get to the cost for 95 units, we'll say that 2,750 divided by 100 will tell us the cost of one item, so cost per unit. And then once you have that cost per unit, there are 95 units that were sold, so you will multiply it by 95. So work out the cost per unit first if you find that not all of the units are sold. So you'll work out the individual cost. You'll take the total cost as it is and divide it by the number of units that are produced, which in this case the total cost is 2750. The number of units produced is 100, and this will tell you the cost for one unit. And then since 95 units were sold, we multiplied it by 95, and that gave us a value of 2,612.5. So that's done here as well. So we worked out that 27.50 is a cost per unit, and since there are 95 units that are being sold, it would be 27.5 times the 95, and that gave you the 2612.5. So that's now the cost involved for job 642. So you'll take your sales, subtract your cost of sales, and that will give you your gross profit for the period. So for job 641, the gross profit for that job is 2,200. For job 642, the profit is 712.5. For job 643, the profit is 2958. And remember, in your total column, you're going to just be adding up all of those costs that gave you the 17,872.5, and then you can say the sales minus that total cost of sales gave you that gross profit of 5870.5. Okay, any questions? All right, so I'm going to just explain to you what a job cost sheet is and how it works. You're not going to be the do you mean what were we asked to calculate? So this is the question. So they didn't actually write out the question, but the question in this example was to determine the gross profit or profit. You don't have to say gross profit. So determine the gross profit of each job. So we use the sales information given to us here. We calculated the sales. So this was the sales. Then we had put that into this column, sorry, this row. Then you put in your cost of sales. Most of them you calculated already. You just had to make this one adjustment for job 642, and that gave you your gross profits. Okay, so I am going to do an additional example of this. Yes. Correct. So you would have to do all of that work to calculate just the gross profit, but it is generally a question where here it was asked separately, so we had to only in example 7.4 here calculate the gross profit. But most of the time, it's going to be in total, it's generally about a 20 to 25 mark question, where from the start you calculate the total cost of a job. You then use that total cost, like I said, to determine your. Remember, like we did here, we separated those goods that were completed and were finished can be sold off from the ones that weren't, the jobs that were incomplete. The jobs that are complete, we then use that to determine or we apply our markup to determine the sales. Once we have the sales, we work out that minus your cost, and that will give you your gross profit. So I am going to show you right now in like the next 2 minutes a typical example. I just wanted to explain to you what a job cost sheet is. This is generally just a theory question to explain what a job cost sheet is and what information it entails. So, a job cost sheet is basically everything that we did so far, this entire example that we looked at just now, as well as, well, basically from the start of it, where we calculate this is the cost of the job, or this is the material, the labor, the overheads that goes into the costing of the job, and then using that cost, adding on the markup, determining the selling price, taking the selling price, subtracting the cost, and working out the profit. That is all summarized in a job cost sheet. So a job cost sheet is basically taking every to a job cost sheet to determine the total cost and profit associated with a particular job. So, what happens here is when a customer places an order, a business would generally fill in something called a job cost sheet, and the job cost sheet generally has all of the information pertaining to that specific job. So, it will have information about this is the customer, this is the name of the customer, this is the date that they placed the order, this is the date we will start with the order, this is the date we'll be halfway through, this is the date that we'll complete the order, information about the entire job. So you'd also have the cost of the material, so how many units needs to be completed or how many units were ordered by the customer, how much material is needed, how much labor is needed, how much overhead is needed, what is the cost of the job in total, what is the sales because we'd be given the markup, what is the sales, and then what is the gross profit. So literally everything we just looked at calculating is just put onto paper in something called a job cost sheet. And this is something that is for the purpose of both the organization as well as the customer, because it's basically serving as a proof of the job that had been undertaken by the company, and it's giving the customer an idea of what the cost will be involved in that order that they have placed. So, this is generally a theory question, so please make note of it. And I will show you here what it looks like, but you're generally not asked to draw one of these up, but I'll just show you what it looks like, and then we'll do that additional example. So it is in your textbook. You can have a look at it there as well. The job cost sheet, what it looks like. It literally includes everything that I mentioned to you just now in terms of who the customer is, when they place the order, what date we started the order, what date we'll complete the order, what the order itself is, how many units are ordered, what the material is that's required, what the labor is that's required, and so on. Sorry, it's taking a while to load on my side, but you can have a look at that in your textbook. I'm just going to wait a few seconds more. If it doesn't load, then I'm just going to continue to the next example. You can just have a look at what that looks like in your textbook. Okay, so here it is. As I was saying to you, you have information about customer is their order and so on. Then we have, if there are different departments it needs to go through, like here it has department X and Y, then you'd need to state this is the material that's required, this is the labor that's required, this is the overheads that's required. Once you have that, you sum up the three overheads, sorry, material, labor, overheads, that gives you the total cost. You add on a markup that gives you the selling price, and then selling price minus your cost of sales gives you your gross profit. So this is what a job cost sheet looks like, but as I said, you are not asked to actually draw that up. So please just know what it is, the explanation of it, and then let's look at this additional example. So I have uploaded this additional example for you. You can find it under the case studies and activities folder on VC Learn, and it's labeled Learning Unit 7 Job Costing Example. Okay, so this is a question straight out of a past paper. It is excellent practice because this is literally exactly the type of way that they ask you this section. And here they are going to be putting each individual question. Well, basically all the steps that we had looked at, you'll see that it's separated here into a couple of different questions. So it's not just one big example for with one question for 25 marks. You'll see on the next page that each bit of it is broken down. So as you can see here, They broke down each separate question for you, and they each have their own mark allocation. So even if you're getting something wrong, it's not going to have a domino effect of where everything else goes wrong. For some parts of it, it may have, but for most of it, you'll definitely get part marks, and this is especially why it has been separated. Okay, so this is on VC Learn, the case studies and activity folder. All of the additional examples that we worked through throughout the semester is in this folder, case studies and activities. It's basically everything from Learning Unit 2 onwards, where we had worked with additional examples from past papers. Okay, so as I said, this is already up there. It's labeled Learning Unit 7, and I think I labeled it job costing example. Okay, so let's get started with this. So it says to you, Swing Swing Limited manufactures tennis rackets. The company uses the job costing system to cost its production. So the moment you see the words job costing system, like they have mentioned to you here at the top, this immediately says to you that you are working with Learning Unit 7. Information relates to Swing Swing Limited for the month of April 2017. They've given you at the top here the schedule of costs relating to jobs as at the 31st of March 2017. And this would be any opening balances that you have given to you is your opening work in process. So this is what is basically going to be added on to the cost of job A33 and then C23. So it's the total. You don't have to worry about the individual figures because these added up gave you that total. Okay, so here they had then said to you in the next bit that the schedule of costs incurred on these jobs during April 2017 are as follows. So they've given you for job A33, F54, L49, and C23. So this is important because this is saying to you immediately again from the information provided that you only had work in process opening balances for A33 and C23. That means there was no opening balance for F54 and L49. So immediately you would have recognized that. The next thing you need to pay attention to is within brackets, they had stated to you the number of units that are completed for each item. So this is the number of units that they have aimed to produce. So 20 units for A33, 25 units for F54, 15 rackets for L49, and 55 for C23. So that's quite important as well. Then they've given you the direct material and the direct labor costs in these two columns. And then they said to you under additional information that factory overheads are applied at a rate of 10% of the total direct cost. The direct cost is the sum of your direct material and your direct labor. So once you've added them up, you will work out 10% of that, and this would be your manufacturing overheads. So please pay careful attention to that. Take that down as well. Or if you do have this worksheet downloaded, then you can highlight that. Then it says to you the only job still in process. Excuse me. So the only job still in process. In fact, before we move on, let's actually work out what the work in process is. Sorry, what the factory overheads is. So here they had said to us, we just saw that it's 10% of the total direct cost. And I said to you, the direct cost is the sum of your material and your labor, direct material and direct labor. And then once we add that up, it's 10% of that. So for the first job, it's basically going to be the sum of the 2,400 plus the 4,500, and you'll multiply that by 10%, and that's going to be a figure of, sorry, I need to calculate it, 400 and, sorry, not 400, 285. Then for the next one, it's going to be the 3,700 plus the 690. Once you add those two up, it's going to give you 439. And oh, sorry. Okay, and then you'd add up the 1,300 plus the 350. Once you add it up, you will multiply that by 10%. That is 165. And then these two added up, multiplied by 10%, is 1,410. Okay, so this is important because now we actually have your applied manufacturing overheads. So it becomes quite useful when we're calculating the cost of these jobs. We know what your material is that was here, we know what your labor is that was here, and now we know your applied manufacturing overheads. So now to continue to the rest of the additional information provided, they said to you that the only job still in process on the 30th of April 2017 was job L49. All other jobs were completed during the month. So that would mean that the L49, the job L49 was still a work in process, it was incomplete. And all of the others then would be completed, so they would go to finished goods. So again here, please make note of that. Only job L49 was incomplete. That would be your work in process, and then the other three jobs were all completed. And then they said to you that the total cost of job C23 was correctly calculated, and this was 25,630, and this amount includes an applied overhead of 1,410. We actually already calculated the 1,410 here. So this is all the information that is provided to us. Let's have a look at, oh, actually there's more information on the next page. They said to us that the sales during April were as follows. For job A33, all 20 rackets were sold at a cost of 40%. Sorry, at cost plus 40%. So that was your markup on cost, 40%. For job F54, like we saw in the example we worked with just now, 23 rackets were sold at a price of 290 Rand per racket. And job C23, all 55 were sold, and it was at 35% on the cost. So 35% markup added on. Then they said to you your actual factory overheads for the month was 3,250. This is important because that means the reason they've given it to you is because you're going to compare this actual overheads to your applied overheads and determine whether there was over or under allocation. And then they said to you that the marketing and distribution expenses amounted to 4,700 Rand for the month of April, and you can ignore spoilage. So we haven't come to what spoilage is yet, so don't worry about that. So the first question said to you, calculate the cost of jobs A33 and F54 that were completed during 2017. So just the costs of these two jobs, A33 and F54. So here You can do this in table format because it would be easier for you to. So for your jobs A33 and F54, you're going to write out that it is the sum of, remember, firstly, any work in process opening balances. Then you're going to add on your direct material, direct labor, and applied manufacturing overheads. And this is going to tell us the total cost of that job. Okay, so here for the first job A33, we need to look at, was there any opening work in process? So here there was an opening work in process for job A33, which was 3465. So you'll enter that here. And your direct material then from the table here, A33, its material was 2,400. Its labor next to it was 450. And its overhead at the end here we had calculated was 285. So we'd simply add up all three of those, and that was 6,600. Then for job F54, there was no opening balance. So we would ignore the opening balance. You can just put in a dash here. And then your direct material was 3,700. Your direct labor was 690. And your applied overheads was 439. So those three added up gave you 4,829. Please can I ask that you are paying attention to this example? Please don't write down while I'm explaining to you. Look at this and understand where the figures are coming from. You can listen to the recording again and take down anything you need to, but please do pay attention so that you understand how we are going about calculating each of these figures. So then we were asked to, so that was the final answer for question 1, job A33 and F54. This was the total cost for job A33, the first one, and then job F54 was 4829. Then the second question asked you to calculate the closing work in process on the 30th of April 2017. So your work in process was the only job that was incomplete here. So that was, we wrote down here, work in process was job L49. So you'll do the exact same calculation for job L49. You don't have to do this in table format. You can write it out, but because I already have the table drawn up here, I'm just going to add it onto this column, but you can just write it out. So for job L49, it's exactly the same calculations that go into it. There was no opening balance for job L49, so it's just its material of 1,300 plus its labor of 350 plus its overhead of 165. So those added up gives you 1,815. So as I said, you could have just written it out. You could have said L49 is equal to the 1,300 plus the 350 plus the 165, and that would have given you the 1,815. Please make sure though that you are showing the calculation of these manufacturing overheads, whether it's at the beginning like I did here, like I showed it to you first, or whether you want to do it when you're calculating the total cost for the applied overheads. You can do it there as well. That's perfectly fine as long as you have shown the calculation of it. So that's the second question as well. So you can see how it does become easier when the questions are broken down into individual bits, because then you have an idea of what you are looking for, and you also are able to separate them, and you're not doing it as one bulk question. Okay, so question 3 here now says to you that they want you to calculate the net income for the month of April. So here for the net income, you're going to now look at, and this is a similar question to what we did in example 7.4 just now in your textbook. The one, Alex, that you said this was the entire question we had to do work for, just to calculate that gross profit. This is the same question. So here we're calculating the total net income for the month. So please bear in mind that it's for the month. It's not for any particular job. That is very important to understand. So what's going to happen here is, and I'm going to do this in table format as well. So here you're going to have a column to calculate for A33, F54, and C23, because these were the only jobs that were completed. We can't include L49 because L49 was not completed. So that's C23, F54, and okay. So that was A33, F54, and C23, and then a total column. So what we're going to do is we're going to determine the sales. Then we're going to subtract the cost of sales. So I'm going to put in the minus sign here. So that's minus. And then here, once you have that, I'm just going to erase this part. We don't need the whole bit. So once we have this, it's going to tell us what the gross profit is. Once we have the gross profit, we're going to subtract any additional expenses. So I'm going to put in the bracket here as well to show that. And that's going to give us our net income. Okay, so here we are going to calculate the sales, determine that sales figure, subtract your cost of sales. That would give us our gross profit. Then we're going to take that gross profit and subtract any additional expenses that we have, and that is going to tell us what our net income for the month is. Now, the fact that they asked you to calculate this for the month immediately tells you that you need to include the total column. And this is why I have included it here, because we're going to have to calculate it for the month and not just each specific individual job. So here for the first one, remember it was only these three jobs because these were the only ones that were completed. The others weren't completed, so we're not going to, or the other one was not completed, so we're not going to include that. So here, job A33, F54, C23. Let's calculate the sales. So this information at the top was pertaining to the sales. They said to you that for job A33, all 20 rackets were sold and it was at cost plus 40% markup. So for job A33, we had calculated here that this was the total cost. Here at the bottom, so this amount was the total cost of job A33, 6,600. So it is at 40% markup. So you're going to say 6,600 times 140% or times 140 over 100. You must show the working out of this as well. There is specifically marks allocated to this, so please make sure that you show it, whether you draw up the table big enough and include it, or whether you show it on the outside of the table. Please make sure you are showing it. So this amounts to 9,240 Rand as your sales for job A33. Then for job F54, they said 23 rackets were sold at 290 Rand per racket. So that's 23 times 290. And that's going to be 6,670. And then for job C23, they said all 55 rackets were sold at cost plus 35%. So for job C23, we didn't calculate the cost because they gave it to us in the last point. They said to you here the total cost of C23 was correctly calculated at 25,630. So it's 25,630 times, it's 135 because it's a 35% markup over 100. So 135 over 100 gives us a total sales of 34,601. So all three sales added up now gives you a total sales of 50,511. So that's your sales, quite straightforward there. Then in terms of your cost of sales, for job A33, all of the rackets were sold, which means that all of this cost is your cost of sales. So that would be the 6,600. So that's going to give you a gross profit, and I'm going to work it out while we're here, of 2,640. That is the sales minus your cost of sales. Then for job F54, it was a sales figure of 6,670 minus, they said to us for job F54, 23 rackets were sold. Now let's look at how many was produced. For job F54, here it is here, 25 rackets were produced. So basically what they're saying is of these 25 rackets, 23 of them was sold, so it went to finished goods, and that would make the remaining two unsold. So here it was completed, but it was just unsold. So here it is, everything is completed. So that's also going to be finished goods. But the ones that are sold are also going to be closed off to cost of sales. The ones that are not sold will remain in the finished goods account. So please pay attention to that. Out of the 25 units of job F54, 25 was completed, so it would be 25 finished goods for job F54. But of this 25, only 23 was sold, so only 23 would be closed off to your cost of sales. The remaining two would remain in the finished goods account. So here to work out the cost of the 23 goods that were sold, you're going to say that the total cost of job F54 was 4,829. This was a cost of 25 units. So what divided by 25, and this will tell you the cost of 1 unit. Remember, it's the same thing we did in the previous example. And then we sold 23, so you'll multiply that by 23. So 4,829 divided by 25 tells you the cost of 1 unit. We sold 23 units, so we multiply that by 23, and this tells us that the cost is 4,443. Okay, so that gives you a gross profit of 2,227. So that's your sales minus your cost of sales. And for the last one, it is a 34,601 Rand sales, which we have here already. Let's work out the cost of sales. So here, all 55 rackets were sold. So that would mean that all of, so here for job C23 at the bottom here, this cost of 25,630 was for all of the units produced. So exactly that 25,630 will be our cost. So the moment they're saying to you that all of the units are produced, then whatever the cost is that you calculated would be the same cost that you would use here. Only where they say to you that only some of the units were sold, not all of them, then you would have to do the calculation like I did at the bottom here, where you calculate only the cost of those items that were sold. Okay, so now we have everything necessary here. So you add up all of your, oh, sorry, I forgot to write down the total here. That's 8971. So now you have all of your values for your cost of sales. When you add up all three of these cost of sales, it's 36,673. Then your sales minus your cost of sales for the total column is going to give you a total of, sorry, I actually need to work that out. 13,838. So that's your total gross profit expenses. So your additional expenses, they mentioned to you in the last point here, marketing and distribution expenses. So maybe within brackets here, you can write that this was for marketing and distribution, and that amount was 4,700 Rand. So here you'll put in minus 4,700, and the amount then is 9,138 as your final answer, your net income. Okay, so that's your final answer for question 3.3. Let's look at the next one. So question 3.4 says to calculate the closing balance of your finished goods. So what I had explained to you at the top here is what they're asking you for now in this question. The closing balance of your finished goods. That would be the remaining two items here, because as I said to you, if the 23 items are sold, then they go to cost of sales. The two that are unsold remains in the finished goods account, and this would be the closing balance of your finished goods. So the cost of the two units is what we need to calculate for this question. So it's the same thing that we did at the bottom here. It's just that instead of multiplying by 23 units, we now need to know the cost of only the two units. Oh, sorry, I need to erase. So instead of multiplying it by 23, we multiply this by 2. So we say that 4,829 Rand is the cost of all 25 units. We want to know the cost of just 2 units which were unsold. So you will divide the 4,829 by 25 to tell you the cost of one item. And then you multiply it by 2 to get the cost of 2 items. And that would be then 4,829 divided by 25 and times 2, and that is 386.32. Okay, so that's question 3.4. And then the last of the calculations is asking you to determine through a calculation whether the factory overheads were over or under applied. So where the factory overheads were over or under applied. So remember, whenever you are working out whether there was over or under application, you are going to compare your actual overheads to your applied overheads. So your actual overheads they gave to you in this point. Oops. Your actual overheads they gave to you in this point at the top. They said actual factory overheads for the month were 3,250. So that's 3,250 compared to your applied overheads is everything that we had calculated here. So these four added up. So that's 285 plus 439 plus 165 plus 1410. So here 285 plus 439 plus 165 plus 1410. Okay, so this actually amounts to 2,299. So I'm going to just say here equal to 2299. So now you're comparing this applied 2299 to the 3,250. So here you're saying that you had actually allocated 2,299 rands of overhead or rands to overheads, whilst it actually ended up being 3,250. So we had basically budgeted for it to only be 2,299, but it ended up being higher at 3,250, which means that we had under allocated or we had under costed. So here we work out the difference between the two figures, and that is 951 rand. And that difference of 951 rand is a negative. So you'll put it within brackets and you will state that it is under applied or under costed, because that means that we allocated too little to overheads. We had only allocated 2,299 rand to overheads, while it actually ended up being 3,250. So the 951 rand becomes an additional expense to the business. Okay, so that is question 3.5. It is an under allocation of 951 rand. And then question 6 asks you, in a job costing system, what document is used to track costs per job? And that is the job cost sheet. Okay, so that is the example that I wanted to go through with you. Any additional questions from you guys? Okay, you can go off on a quick break, and as soon as you get back, we will finish off with Learning Unit 7. Okay, let's continue. So the next bit that we're looking at is pretty quick and straightforward. It is looking at something called spoilage, and then we'll look at your ledger accounts. Those are repetitive from Learning Unit 6. So spoilage, literal to the words, is referring to those goods that are spoiled during the production process. And up until this point, we had assumed that all of the goods that were produced were in perfectly good condition to be sold off to the final customer. So if a company produced, for instance, 5,000 units, we were going on the assumption that all 5,000 units would be able to be sold. Now, realistically, in the real world, you're going to find that most of the time there would be some goods that are damaged, or there is some sort of defect, that type of thing, where it is not possible to sell off the goods to the customer, and these are referred to as spoilage or spoiled goods. So there are two categories that you find in terms of spoilage. They are normal spoilage and abnormal spoilage. So normal spoilage is wastage or spoilage that is anticipated during the production process, and it already is included in the cost of the product. So here, a lot of the time, businesses will anticipate that a certain percentage of the goods will not be good enough to be sold to the customer, so it will be anticipated already. And then you have something called an abnormal spoilage, which is literally the opposite of your normal. So this is where it is not anticipated, it hasn't been accounted for, it hasn't been included in the cost of the project. And so this becomes an additional cost to the business, and it's written off as a loss in the statement of comprehensive income. So in terms of your normal and abnormal spoilage, we are able to calculate the values of it. So you can follow example 7.5 in your textbook. So this is saying to you that the total cost of a job, which is calculated as the direct material plus the direct labor plus the overheads, is 28,000 Rand. And then they say to you, assume that abnormal spoilage for all of the jobs amounts to 2.5% of the units entering the production line. And they said to you then that in total, the company hopes to complete 5,000 units. So that's important, 5,000 units that they hope to complete. And the total spoilage is 175 units. So 175 units is your total spoilage, and total spoilage is the sum of normal and abnormal spoilage. Normal plus abnormal. So basically, the normal plus the abnormal spoilage is equal to the 175 units. And they said to you in total, this company had produced 5,000 units. So the first thing you're going to do is work out the normal spoilage, which they said to you at the top is equivalent to 2.5% of the units entering the production line. So 5,000 units in total being produced times 2.5%, so times 0.025, tells you that 125 units, here it is here as well, 125 units is going to be your normal spoilage. So we know the normal spoilage. So I'm going to write here 125 units are normal. So in total, if there is 175 units of spoilage and 125 of them are normal, then that would make the remaining 50 your abnormal spoilage. So that's normal spoilage, and then that's abnormal spoilage. So 175 minus the 125 tells you the remaining 50 is your abnormal spoilage. And we need to now work out the cost of each of those. So what we're saying here is that of the 5,000 units that were produced, 175 of them were spoilage, 125 was normal spoilage, 50 was your abnormal spoilage. So whatever was completed and could be sold off to the customer is 4,000, I think it's 4,825. So 4,825 goods were completed and can be sold off to the customer. So basically saying that from this 5,000 units, we've now split it. 175 was spoiled. So 5,000 minus the 175 tells us that the remaining 4,825 is in perfect condition. It can be sold off to the customer. And that's where we got this figure of your 4,825 that is sold off to the final customer. Then, of the 175 that were damaged, that were spoiled, 125 of them were normal spoilage, and then you had your abnormal spoilage, which was the remaining 50. So that's how we determined how many units were completed and sold, how many units were completed, but they were damaged in some way and they weren't able to be sold. And then of those, we identified what was normal and what was abnormal. So now to determine the cost of each of them or the worth of each of them. So what we're going to do is we understood then that 5,000 units were produced in total for this company, and the total cost of these 5,000 units was the 28,000 Rand that they had given to us here. So we're going to say that 28,000 Rand is the cost of 5,000 items. So each item is 5 Rand 60. This is the cost of each of the items. So now we're going to say that the 4,825 items times 5 Rand 60 each will tell us that total cost. This 125 times 5 Rand 60 each year will tell us that total cost. And this times 5 Rand 60 each year will tell us this total cost. So this is how we got to the total cost for the first one of 27,020 here. Then this was 700 here, and this was 280. And that is now the cost of the items that were able to be sold to the customer. This is now the cost of the items that were spoiled, but it was anticipated. And this was the cost of the items that were spoiled, but it wasn't anticipated. So this would become an additional expense to the business. And that is your spoilage. Okay, so that's your spoilage. Let's look at the last bit of the learning unit, which are your ledger accounts under job costing system. So remember, under learning unit 6, when we looked at your ledger account, we saw that there was everything from a direct material ledger account, a direct labor account, a manufacturing overheads ledger account, work in process, finished goods, cost of sales, trading account, profit and loss account. Here, it's the exact same things. The only difference is that instead of being called a direct material ledger account, it's called a direct material control account. Instead of being called a direct labor ledger account, it's called a labor control account. Instead of being called a manufacturing overheads ledger account, it's called a manufacturing control account. So literally the only difference is the name of the account. So as you can see here as well, the only difference is the name of the account. Other than that, the accounts itself work in exactly the same way. Okay, so we're going to look at an example in the textbook. So it's example 7.6, I think it is. I am going to project it on the screen together with the answers here, which is also in your textbook. And let's look at where and how they entered this information. So this is literally the last part of the learning unit. So example 7.6 then is saying to you that this is based on Sia Zuma Limited. They've given you all the information from the next page, and you are going to use this information to enter it into your respective ledger accounts. So, sorry, I'm just waiting for it to load for a second, but you can follow in your textbooks as well. Okay, so they've said to you that these are the balances on the 1st of March 2010, and they've given you balances for three different projects: South Coast Project, North Coast Project, and the Midlands Project. These are all of your work. Oops, sorry. These are all of your work in process opening balances. Gosh, what is happening here? Okay, so these at the top, please write down, is all of your work in process opening balances. And let's try that out again. Okay, there we go. So work in process opening balance for three projects: South Coast, North Coast, Midlands. Remember, you are only using the figures that are given to you at. So it's this total of 1560, the 1575, and the 55 to 30. So here you're going to use only those, and then they've given you the information. They said to you the requisition for material issued during March 2010 is as follows. So that's just a fancy way of saying that this is the direct material that was issued. So your direct material then is going to be the amount of 720 for the South Coast project, North Coast project 420, 1350 for Midlands, 18 for your municipal project. Now, what's important to note here is that you were not given, as you can see, there's a municipal project here. You were not given an opening work in process balance for direct material. Then they gave you your direct labor allocation. So here they gave you the direct labor hours and rands. Now this is again very important. The reason it's important is because, again, and I said this to you when we were going through the examples just now as well, that when we are looking at the information provided, the fact that you have labor hours given to you and you have a rand amount means that the rand amount is going to be the direct labor cost. But the reason you were given the direct labor hours is because you're going to most likely have to use this to calculate your manufacturing overheads. So most likely these these labor hours are given to you to calculate your manufacturing overheads. And then this was confirmed if you look at the point E here. It says manufacturing overheads are absorbed at a rate of 15 Rand per direct labor hour. So that then confirmed that we are using the labor hours to calculate your manufacturing overheads. So basically, you're going to say that it's 15 Rand for 1 hour, and the South Coast project requires 60 hours. It's again the same with the North Coast projects. It's 15 Rand per hour times the 30 hours that are required. Oops, sorry. So times the 30 hours that are required here, and then that's 450. Then 15 times the 70 hours required for the for the Midlands project, and that's 1050. and then 15 times the 20 hours here, and I think that's 600 Rand. Let me just confirm that. I think it is 600, but if it's not, I'll change it just now. Sorry, I don't have my calculator with me. Okay, so as I was saying, this is how we calculate the overheads. And again, the moment you get a question like this, look through it so that you are able to and write down these important bits so that you're able to get all the necessary information right from the get-go. So it makes it easy once you have those already calculated. Sorry, I think that was 300, not 600. Let me change that. Okay, so it makes it easy once you have that, because once you start to now post these to your ledger accounts, you already know where your information is coming from. So we have all of that. Then they said to us, back to the information, they said overheads for March, manufacturing overheads for March was 4,500 Rand paid by check. So this is the actual overheads. And then they said to you, we went through the next point, so let's skip that and go to the next one. The South Coast project was completed and it was sold for 18,000 Rand. The Midlands project was also sold for 65,000 Rand. So here, these two projects were completed, so they would be finished. And they were also sold, so it would also be closed off to the cost of sales account. So also going to go into cost of sales. And the amount that they're sold for, the 18,000 and the 65,000, would be your sales figures. So 18,000 and your 65,000. So again, make sure that you're writing down all this relevant information, because that will really make it useful for you when you are drawing up, if you are drawing up the ledger account. So then you have, they said to you that the North Coast project was completed, but it was not sold. So that would mean that it would be in the finished goods account because it was completed, but it would remain in finished goods because that is saying to you that it was not sold. So it won't go to cost of sales. And then the last one said to you that the municipal project is incomplete. So the municipal project would then be a work in process. Okay, so they said to you the purpose of this example is twofold. We're going to illustrate the ledger accounts and how they are affected for Siyazama projects. We're doing the work in process account for all of the projects, South Coast, North Coast, Midlands, Municipal. Then we're also doing the manufacturing overheads account, the cost of sales account, the finished goods account, and we're working out what the profit is from this from these specific projects. Okay, so the first one we're going to draw up is your work in process account for the South Coast project. So here, your work in process account, the first thing we look for is, remember how your work in process account works, and I'll just draw it up very quickly here, is you'll always have an opening balance. You'll have an amount from direct material, direct labor, manufacturing overheads. Whatever is complete goes to the finished goods account. Whatever is incomplete will remain as the balance in this account. So same idea applied here. So for the South Coast project, which is the one we're starting with, it has a work in process opening balance of 1560. So you'll see it here as well. Balance 1560 on the 1st of March. Then you add in your material, which was a 720, your labor, which was the 900, and your overheads, which was the 900 here. So 720, 900, and 900 again. So you see that here for material control, wages control, and your manufacturing overheads. As you can see, it's just labeled. Instead of direct material, it's labeled material control. Instead of direct labor, it's labeled labor control or wages control. Okay, so this project, the South Coast project, was completed. They said it to us here in point F. So this entire amount is closed off to the finished goods account. So once you totaled up the debit side, it gave you the 4,080. That entire amount is closed off to the finished goods, and there's no balance left in this account. The same with the North Coast project. It has an opening balance of 1575. Its material is 420. Its labor is 675. Its overhead is 450. So we take all of that to the debit side. Here's your opening balance, 1575. 420 is your material, your labor is 675, your overhead is 450. That entire amount is added up. That gives you the total here. The entire amount is closed off to finished goods because they also told you that the North Coast project is completed. They said it to you here in point G. Okay, then your next one is your Midlands project. So the Midlands project has opening balance of 55 to 30. Its direct material is 1350. Its direct labor is 1890. Its overheads is 1050. So again, this entire amount, all of these are entered onto the debit side, and the whole amount is closed off to the finished goods. They said to you here that you will, they also said it to you under the, I think it was point F, that yes, the Midlands project is also completed and sold. So this project is also going to be closed off to the finished goods, and that's 59,520. Then you have the last project, which is the municipal project. There is no opening work in process balance for it, so we'll ignore that. Then it's going to be the 1,800 Rand for direct material, the 455 for direct labor, the 300 Rand for your overheads. So you'll just put that in, and those are the three amounts on the debit side. There's no opening balance, and they said to you that the municipal project is incomplete. So as I pointed out here, it will remain in the work in process account and it will be labeled balance. So this entire job, and so it remained in the account with a closing balance of 2,555. So those are all of your work in process accounts. The next account we need to look at is your manufacturing overheads account. Now, with your manufacturing overheads account, remember how it generally works. If we had to draw up a manufacturing overhead ledger account, we would have, and I'm just going to show it to you here because I have a bit of space. If you have a manufacturing overhead account, you'll list out all the overheads here from indirect material to indirect labor, rent, depreciation, and so on. And the entire amount is closed off to work in process. Now, instead of doing four different manufacturing overhead accounts, here they just summarized everything in one account. So they said, as you can see here, they put in the work in process amount from the South Coast project, the North Coast project, the Midlands project, and the municipal project. So instead of doing four separate accounts, which is quite tedious and quite unnecessary and takes a bit of time, they said instead of doing it as four separate ones, let's just put it in one. So all of the amounts that we calculated from here that I had written out for you, the 900 for your South Coast, 450 for the municipal, 1050 for the Midlands, and 300 for the municipal. All those are literally just re-entered into this column, as you can see here. 900 for South Coast, 450 for North Coast, 1050 for Midlands, 300 for municipal. We literally just wrote it down here again. And then what we did was we summed it up. So that gave us a total of 2,700 Rand. That is now compared to, and I had written it out here for you, the actual overheads that, here it is here, point D, the actual overheads that they had given us, which was 4,500 Rand. Now remember, we are comparing the actual overheads to the applied overheads. So the applied overheads, which I just showed you, was amounting to 2,700 Rand. The actual overheads was 4,500 Rand. So now we're saying that we only allocated 2,700. It ended up being higher at 4,500. So that would mean that we had under allocated. So we didn't allocate enough to overheads and it ended up being significantly higher. So we now have an additional cost being incurred for the business. So the difference between the two is 1,800 Rand. And because it is a negative, because we had allocated too little, that means we under allocated or under applied, this now becomes an additional expense to the business where we debit the cost of sales with this amount and we credit manufacturing overheads. So here we basically had allocated, like we said, too little to overheads. That 1,800 Rand is now us finding a way to cover the cost of overheads because we had allocated too little. So this 1,800 becomes an additional cost. We debit the cost of sales account with the 1,800 and we credit the manufacturing overheads. So as you can see here in the manufacturing overheads account, we have now credited it with the 1,800 Rand and it's labeled cost of sales or cost of goods sold. They both mean the same thing. So that's your 1,800 Rand. Now on the debit side, we've shown that we paid to the bank the total amount for overheads of 4,800. So now both the debit and the credit side is equal to the 4,500 that was actually your overheads. So this 1,800, we need to remember in cost of sales, we need to debit that amount. So in your cost of sales account, you'll also see here on the debit side, we have debited your overhead, sorry, we have debited your cost of sales with the overhead amount of 1,800. So we've done your overheads account. Now let's look at your annual cost of sales part of it. Let's look at your finished goods account. So your finished goods account is going to have all of these. So like here, finished goods on the credit side of the South Coast project because that was complete. The North Coast project was also complete, the 3120. The Midlands project was also complete and not this one because the municipal project was incomplete. So only the ones that were completed would be closed off here. And remember, the way in which the way in which a finished goods account works is you would generally have, if there was any balances, you'd have it here, and then all of the work in process would be included on the debit side. So exactly the same thing is going to happen here. Again, instead of drawing up multiple finished goods accounts, we just drew up one, and on the debit side, we show all the projects that were completed. So that was South Coast, North Coast, and Midlands. So that's this amount 4080 3120 for North Coast and 59,520 for the the Midlands project. So here, as you can see, South Coast work in process 4080, North Coast work in process, and Midlands work in process. Now here on the debit side, you have all three that were completed. Whatever is completed and is sold now gets closed off to the cost of sales account. So this is everything that was completed and sold. Now, remember, they said to us at the beginning, and I had written this down for you as well, that the North Coast and the South Coast, sorry, the in point F here and point G. They said to you the South Coast project was completed and it was sold. The Midlands project was also completed and sold. So South Coast and Midlands were sold. The North Coast was completed, but it was not sold. So now we need to bring that into your finished goods account. That means that South Coast and Midlands were sold. North Coast was not sold. And I said to you that if it's not sold, it will remain in this account. So this 4080 plus the 59,520 gave you the amount closed off to the cost of sales account. That's the 4080 plus the 59,520. And whatever was unsold, which was the 3120, would remain in the finished goods account. So those were the only two projects that were sold, South Coast and Midlands. That is the 63,600. The 3120 is unsold, but it was complete, so it will remain as the balance in this account. So now we had credited the finished goods account with the amount for cost of sales, which was 63,600. We now have to take this amount to the cost of sales account. So because it was on the credit side here, it would go to the debit side of cost of sales. So on the debit side of the cost of sales account, you now see the finished goods amount of 63,600. And now we can sum up your total for your cost of sales. So add those two up and it gives you a total amount of cost of sales of 65,400. So when we are calculating your gross profit at the end here, you're going to say that it's calculated as sales minus cost of sales to give you your gross profit. We know the cost of sales, it's 65,400. That's from the top here. Your sales figure we got from the initial information they provided us with this. Here they said to you, and I also wrote down for you, that in point G, the two jobs that were or projects that were sold were the 18,000 Rand for project, the South Coast project, and for the Midlands project, 65,000 Rand. So we added up the 18,000 and the 65,000, and that's what gave us our total sales of 83,000 Rand here. So you can put that in brackets also. You can say 16,000, and so actually it was less than that. It was more than that, 18,000 and 65,000. So please show the working out here. You'll say 18,000 plus the 65,000 is how we got to that total sales. So the sales less your cost of sales gave you your gross profit of 17,600. And that is it for this example and for Learning Unit 7 as a whole. Okay, any questions from you guys? I'm so sorry I went 10 minutes over time, but I just wanted to complete this example so that we'll be done with the Learning Unit. Okay, so that is it for the module as a whole as well. And I will be doing the 2020 and 2021 exams as revision for you. So most likely what's going to happen is the revision session is going to be online, not on campus for this module for finance. And whatever I don't get to complete in my revision session, I will do a recording of it for you. But there's also going to be an additional exam prep session that's done by, I don't know if any one of you had attended the revision ahead of your test 2 with Nicola Naidu. So she's going to also be hosting an exam prep session. I think it's Tuesday and Wednesday next week. So over and above the revision that I do of the 2020 and 2021 exam, she's also going to be doing a 4-hour exam prep next week. So you can attend that. I think the campus is sending out communication about it. They let you know the time of it and where it will be, which lecture venue on campus. Over and above that, I am going to be doing the 2020 and 21 papers with you. I will send you the link of that. It's most likely going to be on Monday that I'll be having the session, but I will confirm that with you and I'll send you an announcement or an email telling you what time it is with the link. And I'll be going through one of the past papers. And then the other one that I don't get to go through, I'll send you the recording of that. For stats, I will definitely be having a session for that. It will most likely be on campus. I'm just waiting for them to confirm whether that will be on campus or not, but I think it's leaning towards being on campus, but that will be prior to your test, prior to your exam. So possibly, I think on the 4th of July or so, we should be having that session. All right. Thank you, everyone. Enjoy the rest of your day and your weekend as well. And I will send you that information about your exam prep session that I will have. And then also look out for the communication from campus about the other exam prep session. Thanks, everyone. Bye.